Dow's up 630. Morning, Bob.
A lot of faith in fiscal stimulus out there. Nice little bounce here in the United States, particularly on commodities. Chevron, for once, helping the Dow Jones Industrial Average. Just want to show you what's going on here. Let's take a look. Banks on the upside. Energy having a nice bounce, too. Semis as well. Consumer staples lagging. Gold's down. So this is the exact mirror opposite of yesterday. Yesterday, gold was up. Consumer staples were not down as much as the rest of, and the more cyclical groups like energy, of course, were cratering. Again, exact opposite of what's going on. I said a lot of faith in fiscal stimulus here. There's talking about stimulus Japan and Italy and Hong Kong as well as the United States. You see crude bouncing here. You see copper bouncing rather nicely. 3-year low in copper, by the way. Yesterday. So global markets are bouncing a little bit here. Want to reference oil. Speaking of oil, take a look at Saudi Aramco. Remember, 32 rials was the IPO price. That was back in December. It dropped as low as 27 yesterday. So it actually dropped below its IPO price. So you can see it bounced now to 31. So it's close to its IPO price. Again, that's 32 rials was the old IPO price for Saudi Aramco. You want to see the avalanche of companies that are basically withdrawing their guidance here. We had bookings overnight, and I think bookings important here. They run Kayak, they run Open Table, a whole bunch of websites here. They withdraw the guidance. They had it 2 weeks ago. They gave guidance, but they said at that time, we're not entirely sure what's going on. So they certainly were very reasonable withdrawing at this point, and they can't quantify the virus impact. We've seen this with a number of companies, talked about this in the last couple of days. Host Hotels, United, JetBlue, Hyatt, all of these companies are basically saying we're unsure about what our guidance is right now. So the market's already priced in a lot of that uncertainty. The question is whether it's priced in the earnings situation. I just want to show you, a few weeks ago I said analysts were starting to take down their numbers for the first quarter and the second quarter, but they seem to have sort of stopped. So we still have estimates where first quarter earnings are estimated to be up 1.7% for the S&P 500. This number is certainly wrong, and for whatever reason, they have stopped taking the numbers down as aggressively as I think they should have. You see January 21st. If you want a better indication, look to Europe and what they're doing with their earnings estimates, because Europe is ahead of us. They are dealing with direct impacts in Italy from coronavirus. January 21st, this is industrial estimates. 5.4, now down 24, okay? I'm not saying this is the same thing that's going to happen in the U.S., but this is an example when they're a month and a half, 2 months ahead of us potentially in terms of the impact, and that's what you want to look at this point in terms of where we're going and the estimates. Unfortunately, the analysts should have been a little more aggressive. They sort of stopped a few weeks ago, and I don't know why, but look to Europe in terms of what's going on. At the lows of the day, but still up 600 points on the Dow.